All right, we're back at Stocktoberfest with another executive interview. I'm here with John Han, CFO of DeFi Development Corp. John, thank you so much for taking the time to talk to us. Let's talk about your company because we have a lot of conversations about these treasury strategy companies. You guys take a different approach. How do you describe what you're building at DeFi Development Corp?
Yeah, so we think about it from a few different angles. First, we were actually the first non-Bitcoin digital asset treasury before they were called DATs, launched in April. So from the first perspective, we are accruing Solana by raising capital in the traditional capital markets. We do that via pipes, via ELOC/ATM, via convertibles, warrants, etc. Kind of like many of the other players out there. What we have also done is that we are thinking about us as a bridge between traditional capital markets and DeFi capital markets. What does that mean? So we are bringing all that capital, obviously buying Solana, which is great, but we also deploy that capital on-chain. What does that mean? That means we're able to earn additional yield on top of that. We also have technologies like validators, etc., which earn us additional Solana, and we are able to take that DeFi yield/returns and bring that to traditional finance. So we're taking crypto and earning yield and basically taking those returns and bringing that back to TradFi and TradFi Capital to DeFi. So it's a fantastic bridge, and that's literally our logo.
And so tell me about your background. Have you been in crypto a long time? Are you from the traditional finance world?
Yeah, back in the day, studied finance in school and worked at Goldman Sachs. After that, worked on the buy side for a number of years. So come from a traditional finance background. Then have actually had a Mt. Gox account since 2013. I literally pull up my email to show people sometimes. But interestingly, joined Kraken around 2020, and then was at Binance, the global entity, for a few years as well. And more recently, a CFO of another blockchain layer 1 company called Provable. So been in crypto and TradFi for a number of years. And that's also the beauty of our entire management team and also all of our employees. A lot of them, I would say the vast majority come from Kraken. So our chief strategy officer loves to say that we have literally decades of experience cumulatively in crypto, which is very unique.
Okay, interesting. And so you've been in kind of both Goldman, and then tell me about, so when you were at Kraken and other places, this was before this sort of embrace from institutional players and traditional Wall Street of these DeFi sort of systems. And now I feel like the last 6 months, it's sort of, they're kind of all in. What do you think took them so long, or what do you think changed on the traditional finance side, where now there's this embrace of what you're building?
Yeah, I think there's kind of two aspects. One is probably the regulatory side.
Yeah.
So back from my times at other crypto companies, we'd always want to have multiple bank accounts just because you never know what's going to happen.
Yeah.
So that's one aspect. Just like there's a more of a stamp of approval. Things are more legal. You're allowed to do things without necessarily going straight to jail per se.
Yep.
And then the second aspect is there's just been so much more development on a lot of these DeFi and also even CeFi crypto protocols. The quote safety of these things is significantly higher. There's a lot more audits. The usability as well, like there's more UIs that actually exist versus you just have to code things. So those two aspects, things are legal and things are more easy to use.
Yeah. And then tell me about why Solana, what kind of the philosophy, because you obviously have Sailor and Bitcoin, now Ethereum and top. So Solana, though, that seems differentiated.
Yep.
Why is that the vehicle of choice here?
Yeah, so our entire team obviously loves Solana very much. We think of it as being cheaper, faster, and more scalable. So that's really the very simple elevator pitch. Why is it interesting? Because no one's ever asked for a transaction to cost more money. So cheaper is always better. No one has ever asked for a transaction to take longer. So faster is always better. And more scalable is always better. No one's asked for, I want my transaction to take, 3 years because someone else's transaction is ahead of mine. So those three aspects, when you think about it from just like a normal human perspective, like, do I like this blockchain? Do I like this other blockchain? Blah, blah, blah. These are the core fundamental principles of Solana, which for us are like, okay, this thing actually makes sense. And then you actually look at the real data in terms of how many people are building on this, what's the throughput, number of transactions, what's the revenue of this blockchain. All those things are going up and to the right. So from a directional perspective, from an adoption perspective, from developers, users, institutions, they're all going the right direction.
And I'm interested too in your role as the CFO, kind of managing. You have a sort of volatile asset in all crypto, but Solana especially. So how do you think about taking advantage of sort of the opportunistic accumulation with risk management? Because it seems like this is a different kind of CFO ask than a lot of companies.
Yeah, it's definitely different than, I would say, a traditional SaaS type of.
Yeah.
Generally for us, when we raise capital, we are looking to deploy that capital in the most cost efficient and also expedient manner. So when we, let's say, raise $100 million in traditional markets in fiat US dollars, we don't want to like try to time the market because we will be price takers versus trying to say like, oh, Solana's definitely going to 150 this week versus like next week or 250 next week, whatever it's going to be. So that said, we are looking to buy it efficiently and effectively. So that comes from buying locked Solana, which a lot of the players do, but also looking at DeFi protocols to deploy that Solana in effective way so that we're earning additional yield. So all this together, the traditional markets, how can we access it efficiently? How can we deploy efficiently, get the best discount? And then after we get it together, how do we make that additional yield in a safe way? Because there's definitely ways to earn like 100% yield, but your coins may not be there in a week. So we these are all things that we think about.
Okay, interesting. Now I want to talk about just communication with retail investors. What you're describing for someone outside of crypto DeFi, help someone understand what the purpose of having something like this in your portfolio might be. Of course, it's not the same for everyone. Of course, this is not investment advice. But how should people think about this type of investment as part of a portfolio strategy?
Yeah, so for a normal average retail investor, let's say they have a bucket which is like lower volatility type of stuff, bonds, maybe straight up cash, maybe high dividend stocks, that kind of thing. And then maybe they have a little bit incrementally more volatile stuff, incrementally. To some extent, where high net worth individuals are involved, maybe there's private equity, maybe there's venture, that kind of stuff. So it's really a function of how much people are deploying within the portfolio along the risk curve and basically the volatility curve. For us, we believe like crypto adoption and also Solana adoption is continuing to increase. And of course, the people that love Solana are continuing to add to Solana, and there will be more people adding to Solana. Then we think about, okay, the next layer of that, what is the best, most effective way to hold Solana? You could just buy it on a centralized exchange and you buy one Solana today and, maybe stake it. And in 10 years, maybe you have like a little bit more Solana because there's some staking rewards, but you pay tax and all that great stuff. So it's not a very effective way to grow Solana outside of the FX price. Then there's obviously ETFs. So ETFs are basically the same thing as kind of buying that. It's literally just tracking the price of Solana. For us, because the focus is on Solana per share growth, like today, let's just hypothetical, you buy X number of shares, that equates to one Solana for us. Over the next few years, and we've given some guidance historically on this, but let's say we grow that Solana per share by 5x. So regardless of what happens with the price of Solana, you actually have literally 5x more Solana. So if you like Solana, then you should love DFDV stock because this is the most effective way.
Interesting. Looking ahead next 3-5 years, financial goals of the company or company goals overall, where do you have the teams pointing? What direction do you have them pointing in? Where do you want to be?
Yeah, so the beauty of our company is that all of management, all the employees of the company are super, super aligned with our shareholders. Like we do not have any promote shares. We don't have some weird incentive package where like, if the number of Solana actually goes down, people get paid. So we are incentivized to grow Solana per share just like everybody else from a retail perspective. So we are super, super aligned with our retail investors. So we've given guidance, like right now our Solana per share is roughly 0.08. So basically when you buy one share, that equates to call it 0.08 Solana. Our goal in the next few years is to grow that to 1 Solana per share, which would be a fantastic outcome because that's over 10x increase in the Solana per share. And on top of that, we literally have, just to really, emphasize this even more, our bonus targets for all the employees in the company are based on Solana per share growth. So when we think about what we do every day, we're first to market in a lot of these things, whether it's literally coming to market, literally issuing warrants, doing the pipes, all that great stuff to raise capital. Then we're also thinking about how we can be the best at everything. Are we doing everything we can to increase the yield on our Solana, on these DeFi protocols, on, raising capital in the most effective way, buying the Solana in the most effective way so that ultimately that trickles down to our investor base. And lastly, just being relentless. Like, anybody can quote launch a digital asset treasury and just buy some Solana or whatever coin and just sit there and just like wait 10 years. That doesn't do the right things for retail investors or institutional investors. So we are literally always thinking about how do we accrue more Solana for your bags, for our bags, for everybody's bags, on a per share basis, because no one is buying market cap. People are buying shares. And ultimately it's about having more Solana on a per share basis. So to your point, like literally that's all we think about.
Yeah. It's rare to have like a singular focus like that where incentives are aligned. And when you talk about that sort of the goal you want to hit of a Solana per share, what needs to happen for that to happen, either in the macro environment in terms of what you guys are doing, sort of what sets that up to actually happen?
Yeah, so there's a few different kind of aspects of how we actually grow the Solana per share. Obviously having a very positive capital markets is helpful, because when you trade at over 1 time NAV, not to get too technical, but like when obviously markets are more bullish, it's easier to raise capital in a less dilutive way, so you're able to grow more Solana per share naturally that way. Second is just on the technology aspect. So, obviously we've built these fantastic validators and we're earning yield off those from third-party delegations. So it's not even just like our own Solana earning more Solana, which obviously happens and it's fantastic, but we're also earning Solana from other people delegating their Solana to our validator. Kind of related to that is our partnerships with other publicly listed entities. Some already announced, some yet to be announced. But basically we see this entity, in the UK, which we've announced, which will be, a Solana related digital asset treasury there. And we're also doing similar things. I think we've announced in Japan and also Korea as well. We haven't said which company it is, but we've announced partnerships. So these are additional ways that, we're basically creating additional understanding of what's so great about Solana, giving those local markets access to Solana accrual accretion. And of course, we're not a charity, so we have equity stakes in those companies. And over time, over the very long term, we'll sell those down and use those proceeds to buy additional Solana. So that's tapping into traditional markets globally to then accrue additional Solana. And then the last part is, just deploying all the Solana to the extent where it makes sense in various ways, whether it's just straight up staking, various DeFi protocols to earn additional yield. So those are kind of 3 aspects. One is just little TradFi markets in the US for our own stock, TradFi markets in kind of globally and other partnerships in crypto. And then third is just the deployment of the Solana and TradFi crypto in a very effective way.
I love it. The relentless goal, but there's a lot of things playing into it. So fascinating stuff. You'll have to come back. It sounds like you might have some announcements you might be able to make soon. This has been John Han, CFO of DeFi Development Corp. Thank you so much for stopping by. Enjoy the rest of your Stocktoberfest.
Thanks so much.